Good morning, ARMR Insiders. Welcome to the morning meeting. Thanks for joining me. I appreciate it that you spend your time with me getting ready for the trading session. So we're going to go over, as always, ARMR Investing Way. We're going to look at the market through the ARMR Investing Way telescope, as it were. Binoculars. And I use those terms because, let me tell you something. The boat, the bow, she's pointed north. Today's my last day on the desk for the week. I don't know if you're going to hear from me again. We're piling the kids into the boat. We're going up to St. Augustine. We might meet some pirates. I know the kids hope we do. So, notes from the trip. I'll make sure to update you as I go. I'll be looking to pop into the Slack room between 3 and 4 each day, just in case there's any changes we have to make to the portfolio. But I think today it's going to be a big day that we make changes one way or the other. And we'll go over that right now. So as always, what we're talking about is the ARMR Investing Way. It's a virtual hedge fund that we're doing here. All right. We're sharing a trading desk. We follow 3 essential stages, right? We build our whiteboard, do research. And what we're doing there is we're gathering information that will make money for us over time. That's what we're doing. We're not just putting things on the whiteboard because we like them and we think it's fun. We're digging into the situation. We're talking to management. We're listening to conference calls. We're pulling out information that will make money for us. Then we skip to phase 2, stage 2. We use algorithms to help us figure out when to put a position in the portfolio, when to keep it out. That's how we know when the information we've gathered is about to pay us, right? We put the capital to work. And then we wrap it all up in a bow of risk management. You can't get anywhere as an investor if you don't know how to manage your risk. And I think we've proven that this year. So, I mean, you could drive a truck through the amount of alpha we've created this year by simply avoiding the market implosion. And that's because of our algorithms and because of our risk management rules. Okay? So it's been half the year now. Market's down, ARMR Portfolios up. And it's not because we have the greatest whiteboard on earth, although we have focused on defense, energy. We're focused on precious metals now, commodities. So obviously we've had some names that have gone up, but it's managing the risk that's the key. So we're going to talk about that today because the risk monitor is green. So let's just go over a couple of thoughts from the morning that I want to share with you. Let's start by anchoring ourselves here and looking at the S&P. So I've been talking about this magical yellow dashed line here, which is the Fed May 4th hawk day low, I call it, right? It was that was the day the Fed really stepped on the gas and said, we got a problem and we got to fix it. Okay. Market broke down from there and now it's rallied back up to it. This is what has created the risk monitor green signal that rallied back up to the May 4th Fed hawk day low. I know it's a mouthful, but that's what it is. So my first thing that's on my mind this morning to share with you is bear market rallies are like sharks. Okay. If they stop swimming, they die. That's what's happening here. You have that initial surge up. If it can't continue, bear market trend reasserts itself. You've got to see in that first or second week of a new risk monitor green signal, further upside. So in week 1 after the signal, we had consolidation. That's okay. But by the end of this week, we need to see new highs. We have to close above the Fed May 4th day low. Okay. And instead, as you'll see here, we're just banging our head against resistance at that low. Okay. So what we have is a consolidation. If we take out the low of this third up bar, okay, and we close down there, the risk monitor is going to change colors. I don't know if it'll be red, but it will at the very least be yellow. And we'll start raising cash. Okay. Take a look real quick at the NASDAQ. And then here's my second thing that's on my mind that's really bothering me. So the NASDAQ couldn't get above that Fed day low at all. So it's just stalled right at it. But the flip side is small caps have gone above it. So we have these 7 indexes we follow that make up our risk monitor. And a couple have popped above those key levels. Small caps. Look at the IBD 50, right? That's popped above. The momentum index is making a nice tight little pattern there. Hasn't popped above yet, but I kind of like that pattern. So it continues to be this split market. And so what's on my mind this morning has to be bonds. Okay. You all know that bonds lead stocks. Okay. So it's hard to figure treasuries, a long bond. I mean, at some point, we would expect to see treasuries start to go up as the bear market gets really ugly and people are hiding in treasuries. I thought that was going to get started, and then it's just kind of failed miserably, right? So what you don't want in long treasuries is for this thing to make new lows. If treasuries want to find an area in here where they're just kind of grinding sideways after the sell-off, then that starts to make sense. But if they keep imploding, rates going through the roof, it's just almost impossible for equities to go higher in that environment. Almost impossible. And then this is really disturbing here. All right, bonds lead stocks, right? Bonds lead stocks. So you can see the junk bonds exploded higher, and then we got a nice 3-day rally, and it looks like junk bonds were like a day ahead of the market. Well, look what happened yesterday. So if this is the 1, 2, 3 days of the risk monitor green rally, so right here, that low was taken out yesterday. Junk bonds closed below the low of the risk monitor green day. That's not what we want to see. You don't want to see junk bonds leading equities lower. And so we have a gap down this morning. Now, I don't mind gap downs. I told you yesterday, gap up Mondays make me crazy. I mean, it's just the worst time to buy stocks, okay? And so it gapped up, then gave it all the way. Okay. So is today going to be turnaround Tuesday? In a bull market, gap up Monday fails. Market might open lower Tuesday and then turn around and rip to the close. If that happens and we close above the Fed May 4th day low, then everything's fine and the market's going to work themselves higher. And that's just a classic start to the week. Gap up failure, gap down hold, move higher, very positive. But if this gap down extends lower, we close and it follows bonds here. If it follows bonds here, and let's watch HYG. It's down another 0.25% this morning. So if it follows bonds and bonds just get wrecked, risk monitor yellow, maybe red, and I'm off the desk for 3 days. Let me tell you something. When I told ARMR Insiders, I told you guys yesterday on our ARMR Pro trading desk that I wasn't going to be here. I forget who it was, but somebody put into the room, every time Brett goes away, the market crashes. I don't know why that is, but it is true. There's some, first of all, I don't go away very often, but when I go away, I don't know, since you and I have been working together, which is like 2020, January 1st, 2020, when we launched this experiment, the market, for some reason, gets wrecked. So I don't know. If it's getting hammered today and we close below the low of our risk monitor green day, we'll be raising cash. And that's just the way it's going to go. So following bonds, it kind of disturbs me. Maybe that's going to happen. All right, let's move on to things we've added to the portfolio. So real quick, let's talk about precious metals. Will they ever turn into a hedge that we all hope there will be? I don't know. Maybe it's today, maybe it's not. There's the uptrend. So we've got 2/3 of our position on. I could always increase my position a little bit more on a pullback that makes a double bottom and holds. I might do that. Okay. So I don't know what I'm going to do. This is a very steep uptrend, and it's not really going to stop me from holding it if it comes in a little bit here. Okay. This is physical gold and physical silver. We'll see. We'll see if they have any ability to go up with the rest of the market going down. Can silver maintain here? When I came in this morning, it looked like it was going to be higher. Now it looks like it's reversed lower. So we're in a ridiculously highly correlated market where everything seems to go up and down together. So now this is interesting. We did add, but anyway, before I move on with precious metals, we've got our position on. We know how we're going to execute. We know what our stops are. The last thing you want to do with precious metals is eyeball them. You shouldn't really eyeball anything in your portfolio, but I mean, precious metals will drive you crazy. Okay, so just don't look at them. If they got up in the morning, don't get excited. They got down, just forget about it. Just where are they at the end of the day? Is it at the stop or not? Walk away. I promise you that's the only way to handle your precious metals positions. Sitting there and staring at them only make it worse, because they'll frustrate you to no end, and then all of a sudden they'll start skyrocketing. Okay, so that's just the way it is. This is interesting. This is really interesting. Markets are opening lower right now. And we added our first taste of Chinese stocks yesterday. Now, I don't know if KWeb is actually, maybe that's a misprint. Could be a misprint because FXI is going to be down a little bit. But it looks like KWeb, that looks like it's not a misprint. Bid and offer is right. So KWeb is going to be up a little bit. All right, so what we did yesterday, after a lot of thinking, we took our first position in FXI. As you can see, it's closed above the bottoming wedge. So that was a move. That was it. That's the breakout right there. Okay, and KWeb is the same exact bottoming wedge. That's just very attractive to me for all the reasons we discussed yesterday. So the bottoming wedge is broken. It breaks out. We put a position on. We have risk. We have a ARMR Algos giving us the entry point there. In all fairness, the Algos gave us an entry point a couple of days ago, and I waited a day to see is this going to break out of that wedge, and it finally did. So I'll step up yesterday. So I don't know where it's going to end. Does it start to create alpha because it can go up with the U.S. markets going down? I don't know. It's possible because China is the country that everyone loves to hate right now. So any positive news puts the China markets up, and the Chinese government's out there supporting their stock market and trying to reflate their economy. So I just like that trade. It's a good hedge trade for me, and so I'm curious how it's going to perform if the market gets wrecked. Again, we're in a highly correlated market. So the market's getting wrecked. I imagine everything's going down, but we'll see. We have an interesting portfolio set up that's not, really an index portfolio. And what I would say to you is, can portfolios go up in a bear market? I mean, they can. It's a lot more difficult. Volatility is a lot larger, so stops get hit quicker and then reverse. It's a lot more difficult to run money in a bear market. But if the bear's on a rampage, the whole campsite gets ruined. It doesn't make a difference, what it is. I mean, it's like, it just doesn't matter. So if the market's crashing, forget it. Everything will get stopped out in our portfolio. We'll go back to cash, like almost 100%. But if the market just kind of meanders down and there's some volatility and it's kind of like a, slow grind, you can get outperformance in the groups that do well in an inflationary environment. So that's kind of what we're dealing with. The risk monitor might go back to yellow. And if it's just kind of trading like this, not making new lows in equities, you might get this alpha outperformance. You know what I'm saying? But if it gets red and everything's just imploding, then none of what we're talking about matters. The whole market will go down. Everything will get dragged down with it. So, Target, another, terrible, I don't know what they call this one, but, they come out and lower expectations again. The stock's down another 10%, and Walmart's getting wrecked, and all these other retail stocks. So more news is coming out that leans towards stagflation. At some point, the precious metals start to pay. We hope they do. We'll find out. Let me just mention this about precious metals. So the London the London market's open today, right? And so for a couple of days, it wasn't open, and you get a very thin market, and you get this pressure in a thin market. So today is the day where volume's coming back. And what we want to see is if volume comes back, does it support price? And so like today and the rest of this week is going to be very interesting for those positions. We'll see. Newmont Mining being one of my favorites. I don't have anything on the whiteboard today. All right. So I know I published for you the captain's note, and I usually highlight here the stocks that I'd like to own. We're at a critical juncture in the market. If it breaks down from here, there's nothing I want to own. Number one. Number two, we've got a well-structured portfolio now. Conservative portfolio managers, they just own the indexes. Okay. You're not running out there buying individual. You know, the indexes are going to see how this performs. If it breaks down, you get out. Capital is protected. You're carrying 50% cash. That's real conservative. Okay. A balanced portfolio. It's got some ETFs, maybe some China in there, right? Some indexes, and some of our top growth ideas off of our ARMR growth portfolio list. And aggressive is the same way, except for there's no cash in aggressive portfolios. Okay, theoretically, balanced portfolio is got carrying some cash. So I forgot what I was saying. I was telling you guys something. I guess my point was, we're going to wait to see how this is what I was going to say. Thanks for being patient. We've got to earn the right to take the risk at this point. We've got the portfolio structured, and it's going like this. I need to start to see alpha. I need to start to see my net worth going up, right? And if that starts happening, then I can start going to my whiteboard again and saying, hey, are there other things I want to own? I might get stopped out of some names and raise some cash. I'll put it to work. But right now, if I'm getting stopped out of things, I'm raising cash. I'm not putting the money back to work. I have to start seeing net worth go up before I add anything new. And so at a moment like this, I don't even want to look at the whiteboard. I don't necessarily even want to do the research right now. I want to see how the portfolio performs, and I want to focus my attention on managing my risk. It's a risk management moment. That means I might get long volatility in my aggressive portfolios, VIX, right? It means I'll be cutting positions down if the gap down starts to get ugly at certain times of day, which is following our risk management rules. So that's really the focus today. And it's not on what can I buy? What else out there can I buy? So I'm not even going to list anything that I think is interesting, because I don't want that to be the focus at all for anyone. So that's it. Those are my thoughts for today. Any questions you guys have, I'm happy to answer, but it seems like we're all on the same page. So I'm going to wrap up here and say I'll see you on the trading desk all day today. I'll remind you that I'll be off the desk Wednesday, Thursday, Friday, but I'll be popping in. So there'll be no live stream, right? Wednesday, Thursday, Friday. But I'll be popping into our Slack trading desk between 3 and 4 if there's something we have to do with the portfolio. I know what all my stops are, right? I know how to run the money. So if this happens, we'll execute. And we generally do that in the last hour of trading, okay? If there's something going on at 11:30, sometimes we cut positions down, and I might be talking to you then as well. So I won't be incommunicado, but I'll be off the desk. All right, guys, I appreciate your time with me this morning. I wish you all a great trading session.